Good morning and welcome to the AUDUSD Securities Markets Update. Beginning with the latest US session yesterday or on Monday, there were many economic releases showing more evidence for a slowing down and easing the speculation for a sooner rate hike by the Federal Reserve in June's meeting. However, the entire data sets came in with a disappointment yesterday. First of all, the personal spending sank by 0.2% in the month, or basically in January, while the estimates were to rise at least by 0.1%. And this is the second monthly decline, or the second back-to-back monthly decline in a row, not seen since 2009. The personal income also increased, but less than expected, rising by 0.3%. However, this is also again less than the estimated, or basically which was around 0.4% of a monthly increase. The manufacturing PMI, which basically I was looking at it yesterday, and this is basically the most important number for us today. The manufacturing PMI fell more than expected yesterday, declining toward 52.9 in 52.9 in February, down from 53.5, while the estimates again were to decline slightly toward 54.3 only. This is the fourth monthly decline in a row and the lowest reading since January of last year. The components, and starting with the exports, or the manufacturing exports, it also contracted for the second month in a row. First of all, this is not seen since 2012, declining toward 48.5, which is also the lowest reading since November of 2012. And moreover, we had also the employment index, or the employment component, it also declined toward 51.4, down from 54, which is the second monthly decline in a row and the lowest reading since June of 2013. Finally, and most importantly, the construction spending, which basically came in with another surprise decline by 1.1%, despite the fact that the estimates there were to rise by 0.4%. And this is the biggest monthly decline since June of last year, or 2014. As a result of these figures, the Citigroup Economic Surprises Index also for the US collapsed again to the lowest, or toward minus 49.2, which is the lowest reading since July of 2012. Despite of all these negative figures, many may ask why the US dollar kept on rising side by side with the US equities. And the reason behind this is basically that the markets are still believing that the Federal Reserve is on the right track to raise rates in June's meeting. Therefore, more negative data is still needed in the upcoming weeks and the upcoming days to clear the way, or to clear the view. But the main key this week will be the US jobs report on Friday, which, if it come in with another disappointment, it may be the catalyst for new selling pressure on the US dollar across the board. As for the Asian session today, there were a few economic figures from Japan and Australia, which also had a notable impacts on the market. But beginning with Japan, the average cash earnings increased by 1.3% in January, comparing to the same rate in December of last year, while the estimates again were to slow down towards 0.6%, which remains the highest since July of last year. In Australia, the building approvals also increased sharply in January, rising by the most since October of last year, rising by 7.9% after a decline of 2.8% in December of last year, despite the fact that the estimates again were to decline by almost 2%. The current account deficit also narrowed more than expected toward minus 9.6 billion in Q4, down from minus 12.1 billion in Q3 of last year, while it had been anticipated also to decline or to narrow slightly toward minus 10.9 billion. And this is the lowest deficit or quarter-over-quarter deficit since Q1 of last year. During the early morning hours today, we were waiting for the Reserve Bank of Australia decision, and the majority of economists were predicting or were expecting another 25 basis point rate cut. However, the bank surprised the market with no rate cut and kept the cash rate on hold at 2.25, which is a record low. However, the bank kept the door open for further easing in the upcoming meeting, and as a result, we've seen the Aussie dollar advanced across the day, or against the US dollar, at least reaching as high 78.30 today this morning. However, so far our selling area remains the same, or remains between 79.61 and 80.40, which could be seen, or might be seen during or later this month before the downside resumes. As for the European session ahead, there are 4 economic releases from Switzerland, Germany, Spain, and the UK, which may also have a notable impact impact on the market. Beginning with Switzerland, the Q4 GDP is expected to grow by 0.3%, comparing to a growth rate of 0.6% in Q3 of last year, which would be the weakest growth rate since Q2 of last year. In Germany, the retail sales is also expected to rise by 0.5% in January, comparing to a rise of 0.2% in December of last year, which would be also the fourth monthly increase in a row, which is not seen since 2009. In Spain, the unemployment change is expected to rise by 10,500 in February, comparing to 78,000 in January, which also would be the second monthly increase in a row. And finally, in the UK, the construction PMI may decline slightly toward 59 in February, down from 59.1 in January. Going forward to the US session, well, finally during the US session, unfortunately there's no economic release from the US, but we will be focusing on the monthly GDP from Canada, which basically set to grow by 0.2% in December after shrinking by 0.2% in November of last year. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching and have a good day.